Joining us today, BMO Wealth Management Chief Investment Strategist, Young-Yu Ma. It's great to have you back. I wonder, there is this sort of creeping notion that if the Fed is unable to guide the terminal rate higher, which appears to have been the case for a while, that in some ways the pause is already here. What do you think?
In some ways it is here, and I do think we'll see some Fed hawkishness, but it's unclear how much the market is really going to focus on that. The market already doesn't believe the Fed's projections and has its own projections. So when we see inflation falling, when we see that across CPI, PPI, wage growth moderating, I think the market is getting quite comfortable with its own projections here. Even if the Fed has some short-term impact, we don't expect to have a long-term impact if there's some hawkish comments that come out later today.
So if we're right about that, does that ratify the NASDAQ's performance in January? Does it mean that there's more to come, or that we have essentially priced that in?
Well, it's been a great bounce, right? And a lot of what we've seen actually is some of the laggards and underperformers in 2022 have the biggest bounce. So I do think it's time really to start looking at where the stable business models, where's growth going to come from. Probably a lot of the snapback has already taken place, and now it's more of, where are we going to see growth in 2023 and where's the stability going to come from? So I think it's a bit of a change of narrative because we're not going to see the outsized returns probably that we saw in January.
Yeah, there have been some on the street who say sell the year-to-date rally or fade it. One of the theories is that if corporate America, maybe not headcount, but certainly on CapEx comes in, then it's not going to make sense on some of these cyclical names. At the same time, some of these, the Dovers and the IPs of the world yesterday traded as if we really are looking at Goldilocks. Is that mispriced?
Well, I think there can be some softening in CapEx, but when we look after the second half of the year, we actually think the environment will look pretty good. We think some of the softness that we're seeing is really a story of a couple quarters and not longer than that, not lasting throughout the whole year. And as we get wage growth starting to exceed inflation throughout the year, we're going to see spending stabilize, and that's going to filter over to corporations as well. And those budgets, which have been tight for the past couple quarters, may be tight for another quarter or two, but we think they'll start to open up by sort of mid-year and year end. So it'll be a better environment going forward.